this is Union Pacific, Matt, symbol UNP. I'm trying to be consistent here with something I've said over the last, year to 18 months, and several times on live with Jason, I've talked about the rail companies as a great play on infrastructure. I like their strong cash flows. For example, Union Pacific generated $4.2 billion of operating cash last quarter, not last year. If you go with best in breed, which is to me, Union Pacific is one of the best investments in this space, I think you'll be able to benefit from coming investment in infrastructure. The industry does have a few headwinds against it now. We've got the chip shortages, which is causing a little bit of variability in automobile shipments. We've got higher gas prices, so those fuel prices are impacting investors' outlook for the rail industry. But overall, you've got a company in Union Pacific that's improved its operating efficiency by leaps and bounds. They hit a 55.1% operating ratio this last quarter. So to translate that for those of you who don't follow this industry, that's very efficient operations. The lower the score, the better. That was an improvement of about 6 percentage points versus the prior year quarter. It's a great dividend stock as well. I think they're very well poised to benefit from coming investment in infrastructure. There are a couple of blips in this picture. In the Biden administration's infrastructure plans, they have some curveballs they've thrown at the rail industry in that the railroads will have to work together and share access at a few points, which they've not been forced to do before as part of this plan. But they've been preparing for this for a number of years. So I think that will go smoothly. Union Pacific itself has a really fluid network, great switching yards. I don't think it's going to be a problem for them to share access points here and there with its worthy competitors. So overall, when you're looking to build a portfolio of really great infrastructure stocks, think of this as like a core holding. It may not be the one that you weight the most towards, but it definitely has a place in a portfolio like this. And if nothing else happens, you'll continue to reap the rewards of that strong cash flow. Like I said, a wonderful dividend stock. Lots of great improvement in their metrics over the past few years. I see further share price growth ahead for Union Pacific. So this is one of my top ideas for this next year. It's consistent, as I said, with what I've been saying really for almost the past year and a half.
And this is also a really good recession-resistant play. It's worth mentioning. The railroad industry is pretty. It's a very good. If we get a real recession, not like the COVID, the recession that lasted March and April of last year, but an actual deep recession.